I remember it was early this year that I crossed the Kiyosaki threshold. If you ever read Rich Dad, Poor Dad, the idea to get out of the rat race where you stop working for money and your money works for you. I officially got out of the rat race earlier this year when I took profits, paid off my mortgage. My living expenses are de minimis now, and my investment income could cover my expenses. So here I am, I'm sitting at this very desk and I'm like, wow, I've made that Kiyosaki threshold. I'm out of the rat race. I don't have to work another day in my life. So what did I do? Said, well, I got work to do. Right?
Today's episode is made possible by Days to Expiry, a tool that I co-created with Florian and Lovis to help navigate the complex world of options trading. As someone who has extensively used options to enhance their long-term investments, I can attest to the importance of getting the right signals from a sea of trading noise. Achieving financial freedom is a crucial step towards personal freedom, a topic that many of our guests have already spoken about at length. To learn more about how I am working towards my own financial goals, visit daystoexpiry.com.
Welcome. Today's guest is someone many of you will recognize from the resource investing world, but that's actually not the primary reason why we invited him today. Mr. Lobo Tiggre has built a reputation as one of the industry's most respected independent thinkers. He's known for rigorous due diligence, a willingness to challenge consensus, and the patience to wait for the right opportunity rather than chasing the crowd. But what intrigued us, Jason and I, wasn't his latest market calls, although they're probably fascinating. It was the mindset behind them. How do you become the kind of person who's comfortable thinking differently? What does freedom actually mean once you've achieved some financial success? How do you make decisions in a world where uncertainty rules and certainty doesn't exist? Those are the questions we wanted to explore with Lobo today. Lobo, thank you so much for coming on and welcome to the Covered Call.
I'm very happy to be here. I've actually been asking very similar questions as some of my mentors lately, trying to get this knowledge out from the ether and solidify it. So I've been thinking about this stuff a lot. I hope we have an interesting conversation.
Yeah, cool.
Very cool.
Lobo, we're so happy to have you. Thank you so much for coming on. Maybe we can start by you sharing a little bit about what you've learned from your mentors you've been trying to tease out.
Sure. The number one lesson is going to be a no-brainer. It might seem really obvious and not worth saying, but it's important that it keeps coming up. And that is the importance of being a contrarian, which fits with Lovis's intro. I think it's almost a tautology. If you want to outperform the herd, you can't just follow the herd, right? You have to do something different. And maybe doing something different from the herd could be disastrously wrong, but on the other end of the bell curve, it can be spectacularly successful. So as a starting point, I think that's something that everybody out there needs to think about, like really playing it safe. The very best you can hope for is an average result doing that. And then the other thing that's really been interesting to me from asking this question from my mentors and digging into this is it seems like this is partly innate. It seems like, most of them, if they weren't born that way, they grew up ornery, always in trouble, always in the principal's office. At least that was me. Sister Mary Victoria didn't spare her ruler on my hand. You remember the Blues Brothers, the Penguin? Maybe that's why I ended up like Jake and Elwood. I don't know. But the other thing that I've been getting from these conversations is that it is a discipline. It's like a muscle. It can be trained. Whatever innate contrarian genes you may or may not have, you can work on this. This is something that you can develop. You set it as a goal. You think about it. And so all hope is not lost if you find yourself sort of in a midlife crisis, waking up and suddenly saying, well, gee, my life is average.
Well, so what I always struggle with is how much of that is just being like a high performer, right? Like taking your work very seriously and be very diligent. And so being kind of on the top of your field, wouldn't you have very similar outcomes than being contrarian? Because in a way, when you're a top performer, I think you can only be that if you look for an edge. And in a way, the edge maybe is being contrarian.
Yes, sure. Well, I have a couple thoughts on this. One is I just interviewed Rick Rule on this, and we talked about our mutual friend, Doug Casey. And it was an interesting contrast because Rick I don't know if you've talked to him, but if you've just watched him, he's very disciplined, very methodic, thoughtful. He doesn't fly off the handle. Everything he does, everything he says is very deliberate and thought out. Whereas Doug Casey, I don't know which one's the devil on my shoulder, which one's the angel. They probably take turns, or maybe they're both devils. I don't know. But Doug Casey is very intuitive, very instinctive. If you've seen him in real life, that's the way he comes across. If you've ever seen him ski, moguls, don't talk to me about moguls, I'm going, right? He's very gung-ho. And so this is an interesting contrast. And to your point, Doug and Rick often come to the same conclusions, or they'll make the same bets, or they'll have the same market outlook. They'll be long at the same time, the same commodities or something. But Rick comes at it from a credit analyst perspective. I call him a laser guided loan shark. And Doug comes at it from the sense of his gut feeling, and I've literally heard him say to me, I feel like the dollar is going to bounce. And I say, why? I don't see anything in the data. And he's like, I don't know. I just think it will. And then it does. Right. So one size doesn't fit all. There's certainly room for both kinds in there. But I do think that for at least people like me, and I'm on the Rick side. I'm a very algorithmic kind of thinker, not heuristic. I preferably I need a method. It drove me crazy when I used to work for Doug that I'd research something for him. He'd say, that's really smart, but this is what we're going to do. And then he'd be right. Now a few decades into this, I think I'm getting a few more of these things right myself. But it personally, I need to think that I understand something. I need a reason for what I'm doing. And then especially if I have confidence, or if I think I've understood something that the market hasn't, right? I know something everybody else doesn't. That's the ideal thing, not necessarily insider information, but let's say I've been to a mine and I understand the geometry of what they're doing, and I understand a drill result before the average investor out there can process that. I know something, that works for me. I know something, right? But there's certainly people out there, and I'm not going to say otherwise, who call it gut instincts or whatever you want to call it, that can be very successful that way. But in either case, if you're not willing to stand out from the herd, you're not going to have extraordinary results.
Right. So, Lobo, you just touched on a couple of very interesting tidbits that I would love for you to expand on. So, you mentioned working for Doug. So can you step back a little bit in your personal history and give us a quick recap? So how did you become the Lobo of today, and where did all that start? Where did your journey start?
And Lobo, before you start, maybe also highlight where you think you actually went off the beaten path. Like, was it from the day you were born, or was it somewhere down the road?
Well, after Sister Mary Victoria's ruler and Sister Mary Edwards' office that I became well acquainted with, I think maybe I gave up trying to fit in. So from early on, I think I was different. I will say, and this may piss some people off or upset them, but I'm not here to try to be friends and pretend to be what I'm not. I'm answering the question as honestly as I can. I remember very clearly at the age of 12, watching a television show where the white people were making fun of the brown people's religion. And then they go to church, right? And I thought, how can I say that one's true and that one isn't? And so I'm not trying to pick on religion or anybody's religion. I'm just telling you the truth. Is I had an epiphany at one point that until one of these religions can give me evidence or a reason for why I should believe it, I'm not going to believe any of them. And I've been that way ever since. And so if this fits with what you're asking and my willingness to be a contrarian, it fits with, not thinking like the herd. And again, whether you agree with me or not, it just shows that, maybe to the degree that that's innate, that's part of my innate aspect of this. Interestingly enough, this religious aspect is something I share with both Doug and Rick. To answer Lovis's question about how this came about, so this actually fits. I was already, rabble-rousing atheist, anarchist. I had really long hair and a black leather jacket, the whole 9 yards. And that's how I met Doug. I was running a sort of pirate radio station in the very early days of the internet, before podcasting as we know and love it today. And this show, and I was interviewing freedom-oriented people, and somebody said, "Oh, you should interview Doug Casey." And I said, "Who dat?" "Oh, he's an anarchist like you. You'd like him." And so I had Doug on the show. This is the early 90s. And it was like meeting my long lost brother. I'd ask him these questions and all of his answers were basically what I would say, but with 10 times more knowledge and experience to bring to bear to the question, right? His knowledge of Roman history, all the way back to then, historical examples of what did and didn't work. It was humbling at once, but also just thrilling to meet such a like mind. So the sad part of the story here for anybody who's thinking, well, how can I do the same thing, is that it wasn't what I knew, but who I knew. I knew Doug Casey. We were friends when he and his then partner, David Galan, formed the partnership that became Casey Research. And I had never bought a stock in my life. I didn't know anything about finance, really. I never studied geology. I collected rocks as a kid, but I never really studied it. But I was a writer, really. My skill and trade in my mind and my self-definition is still I'm a writer. And so when Doug and David formed Casey Research, Doug had been writing this newsletter for some decades. He was tired of it. He used to call it a bad habit that he couldn't kick. And they were looking for a writer to take over the mechanics. So Doug could provide the ideas and somebody else could do the writing and massage the input from other contributors. By the way, Rick contributed, Brent Cook contributed, other minds that you may know and love from out there in the resource sector. And it was my job to edit this stuff and put out the editions. And so really, I just got the job by being Doug's friend. But hopefully I learned a thing or two. It's stuck. David Galan says I took to it like a fish to water. And, I just loved it. I do love the geology. And I got paid to travel around the world. I love to travel too, meet interesting people. I got paid to do that and meet world-class geologists in the field and have them explain to me what happened. Like if you've ever driven by a road cutting and seen these crazy zigzags in the rock and wondered, what the heck happened here? Like, how could that happen? If you can picture that in your mind, I've seen layers like that where there's a completely smooth layer of rock, like Zorro cut the one in the middle, and there's a completely smooth layer of rock underneath. Like, how could that happen? Right? You can see it if they all get bent out of shape, but how can the one on top and the one on the bottom be flat and the one in the middle be all messed up? I can answer that now, right? So I just had a blast. And this is, I think, a takeaway for everybody is when you're interested in something, when something excites you intellectually, you can become an expert in it. It was so much easier. It's not work. It's not a chore. It's not something you have to make yourself do because you want a Lamborghini. It's fun. It gets you out of bed in the morning anyway, just because you're fascinated. So when you can combine that old adage of do what you love and the money will follow, that's not just hippie, mythology. That really happens in the real world. The mechanics, the psychology of that is that when you do something that fascinates you, that has some kind of pecuniary angle to it, then you have an edge, right? This leads back to the question. You have an edge because the other people that it's just a job. They can't compete with somebody like you who just loves this stuff, right? You're fascinated by it. So I learned a lot. Doug and David hired me in 2004. One of the proudest moments in my life was in 2008. Doug came to me one day and he said, look, I've got these funds that are restricted in the United States only, no Canadian stocks. I need to buy some mining stocks that are just in the US. What would you recommend? So, for my teacher to come and ask me for my opinion, that was, woohoo, I walked on air for a week, I think. And then later, and so this was 2008. And so maybe I got lucky, it was when things were melting down, but Doug made a bunch of money on all those stocks that I mentioned to him. And so, double whammy. My teacher asked me for my input and it worked, right? He made money based on it. So I was really, really happy. Flash forward 2018, Casey Research had changed. It was no longer the same company. Doug wasn't there anymore. So I went independent. I am now the independent speculator, which fits into all these contrarian, many things that we've talked about. But that's how I got to where I am now. I learned from people like that. By the way, Rick Rule invested very generously of his time in me. I met truly world-class geologists in the field, and they were all, it's one thing to be a teacher in a school and all the kids are throwing spitballs and I don't want to be there. It's another thing when there's somebody who wants to learn. They're hungry for what you have to teach them. I don't know a teacher in the world who doesn't love that.
Sure.
To be able to have a hungry mind to transfer what you've learned and your experience to. And the same goes with these geologists. I found that in the field, they love explaining what they figured out. There's no, oh, that's my special sauce, I'm not giving my secrets away. It's, oh, you want to know? Here, let me show you. It's been a fantastic ride. I couldn't have planned it better. Totally happened by accident. Had no idea this would end up. So the bad news is I got here by being someone's friend who I knew. The good news is that I got here through excellence and hard work because I was really interested in what I was doing. The opportunity, the door opened through the friendship, but then the execution absolutely mattered to building my own successful empire now.
Well, I wouldn't even say that's necessarily bad news, right? I think that it just is maybe a hint to make sure that people also look at who they hang out with, right?
6 degrees of separation.
Yeah, because well, it's also this thing of like, there's a saying, I don't know, I didn't check if it's true, but like they say you become the average of the 5 people you spend the most time with, or something like that. So, and if among those 5 people is nobody who's substantially more successful in something that you care about, then you just flattened your chances to do that, right? So I think that's, I mean, the way you framed really it, it's like, well, it's not necessarily repeatable because not everybody can be Doug Casey's friend, but then at the same time, there's plenty of successful people out there that are worth, building a relationship with, I would say. So why not do that? Yeah. So quick anecdote. So when we started the covered call, we connected with some friends that are close to us that we perceive as living a free life, but very, very quickly, somebody also called Doug and Rick to our attention. I was like, you should really talk to these guys. And we're like, we were well aware of, and we're like, yeah, we'd love to. Can you introduce us? And they did. And then Doug was like, I actually didn't have him on my radar before, but then that conversation was like, I mean, mind-blowing is an understatement, right? It was very, very fun. So it's interesting. The freedom seeker space you think is pretty large because so many people make like their thing about freedom. It's like, oh yeah, if you want to be free, you got to be in franchising, or you got to be in real estate. Like everybody's has like a freedom pitch, but then if it's more of a personal journey thing, I feel like it condenses down and pretty quickly to guys like you and Doug and Rick, etc. Many others that we've been lucky to have on our show. So harping on freedom some more. So what does it mean to you to be free? And when freedom can be an abstract term, right? It can also be used as kind of what I just said, like a little bit oversold of a term, but where does it stop being abstract for you and becomes personal?
Well, one way to maybe visualize this is, and this may sound abstract, but to me, I experience it quite physically. If you have freedom, it's thought of as negative freedom. Freedom from political rights are negative freedoms, right? Freedom from interference. That creates a space around you. If you have personal power in your world, you've created room to operate in, freedom, space for your own actions, your own wishes, your own goals. That space around you can be physically manifested. If you have wealth, you probably have a big house. That is physical space around you that you control. It is your space. And I'm not saying that it's the holy grail to go out and have the biggest house ever. I'm saying that is a physical representation of the mental space, the ability to push the world back and have this boundary that is within which is your little kingdom, right? A man's home is his kingdom, his castle, right? I think there's something like that. So I was interviewed recently and somebody asked me a slightly different, they said, what is luxury to you? And so the freedom is my space, my freedom of action, my room that I can evolve in. And my idea of luxury is to have that space empty. Right? It doesn't have to be cluttered. It doesn't, sorry, these all mean something to me, my knickknacks. But to me, if I go out in my living room and there's the sofa and there's the view over the ocean and there's nothing else, like I have created this space. I've created the room for this to happen, for it to be a single focus that means something to me. That is freedom and power all wrapped up in one. So metaphorically, physical space to me is one of the answers. Digging in a little bit, of course, separating the negative from the positive freedom, the negative, so-called negative, it's a negative word, but that's what we're stuck with. The freedom from interference, freedom from government, we like to say. But, I think debt is a much greater infringement on the average person's freedom than government. How many times a day do you actually come face to face with an agent of the state? Not very often, unless you're, a chronic speeder. But if you have debt, all your credit cards are charged up and your mortgage, and you can lose your house and all these things. How much freedom do you have to tell the boss to stick this job, the sun don't shine or whatever? None. You have to keep going to that job you hate, or else you could lose the house. Or, we don't have debtor's prison anymore. But if you're an honorable person, you don't want to declare bankruptcy and repudiate your word, and, shaft the people who lent you money and so on. So there are many different ways we can go here, but I'm saying that the political freedom is just one dimension of a much larger thing. And things that can infringe on your freedom, debt is one of them. Social conventions is another. The expectations of your family. We can love our families, but if they want you to be a doctor and you don't want to be a doctor, right? That can infringe on your freedom. All of these things are worth thinking about. Our most dearest loved ones. Of course, their emotional well-being matters. Of course, we love them and we care for them. But if their needs rule us and overrule our own needs and our own well-being, that's not a healthy, balanced relationship. So that can make you very unfree as well. And one more really obvious thing that touches on all of this too, I think, is money. And it sounds unromantic in today's day and age, but yes, money is power. And I've just described power as the ability to create space around you. And you can see very easily how money does that. And money, if political rights are negative freedom, money is positive freedom. It gives you the power to do something, the freedom to have a yacht, if that's your thing, or to have a big house, if that's your thing, or to travel the world, if that's what you want, or to do things for your friends and your loved ones, right? If you're flat broke, it's very hard to do those things. The money gives you the freedom to do, not just from being interfered with. And as long as your money is ethically acquired, if you're not a crook or a politician, or I repeat myself, right? If you trade the value that you create in the market and people willingly give you money in exchange for that, your power, there's nothing wrong with it. That is ethically acquired power. And to a very real degree, that wealth is a measure of your utility to society. You've created enough value that a lot of people have given you money for it, and you've become wealthy. That says something about how much value you created. I think that's very important. And it's no surprise to me that creates room for freedom. You've created value for society. You've taken risks as an entrepreneur. You've been a contrarian. You've made some bets. You've been successful. You deserve your wealth. You've created value in the world and you deserve your wealth. There's nothing to be feeling guilty about in that regard. So that's my version of Francisco D'Antonia's money speech.
I'd love for you to give that speech to more Europeans, because somehow I travel quite a bit between Europe and Asia, and the philosophy around money is just so different. And sometimes I forget, when I've been away from Europe for a few months and then I come back, I get
I
hit in
hear
the
you. One of my hobbies is teaching economics and entrepreneurship in Eastern Europe. Why Eastern Europe? Because post-Soviet societies, many of the people there are very practical. Like they have a living experience of socialism not working. They were taught that capitalism was bad. So they have no ism. They're just open-minded. They're willing to learn and consider. But the very first thing, to your point, is that the very first thing is you have to talk to them about money, because there's no point talking to them about how to build a good business or what's a good business plan or how to become an investor or build a startup if you think money is evil. If you bought that old cliche about money is the root of all evil, and by the way, I think the correct translation, it's the love of money. It's the greed that's corrupting, not the money itself. But anyway, if you've bought that error, then it's going to undermine anything you're going to do. Like if you think money is evil, why would you attract more of it into your life? You will undermine yourself in your own efforts to do so.
Yeah, or why take risks if the reward for that risk is actually something that's bad, right?
Yes, just so.
We talked about money, right? But there's another word that divides people that one of my favorite words, and that is speculator, right? Can you tell us a little bit about, in your own words, what is a speculator? How is that different from an investor? And is it a bad word?
Well, let me jump into an anecdote here. I believe it was Ecuador. I was with a mining company or an exploration company, and they had a couple projects, one with these really gorgeous veins. The quartz of the veins was harder rock than the surrounding material. So the surrounding material had eroded down, leaving these veins sticking out of the ground. Really dramatic scenery, beautiful to look at. It's never worked out as far as I know. None of that has ever been mined, but it was really fun to go look at the rocks and understand the potential. But the point of the story is we were in some little guy's farm there in between things, waiting for the geologist to come back from talking to some contractor or something. And I'm talking to the farmer, and he was saying that there was a problem with these evil speculators who had grabbed up a bunch of the land. And so I said, well, let's talk about that. And I said, well, suppose you watched these people working on this project and you saw that they seemed to be having some success. And you understood something about the value being created. So you decided to buy up more of the land around here. And then suppose they go ahead and they build the mine. And now they need this land. And you can sell it back to them for 3 times what you paid for it or 5 times what you paid for it. But meanwhile, you have the expense of holding the land. You took the risk of buying it without knowing for sure that the mine would be built. Would that be a bad thing? Or would you deserve to make the money for taking the chance in doing this? And he thought about, oh, no, well, I would deserve the money. I said, well, that would make you a speculator. It was, a real eye-opening moment for him. And I said, look, I understand why sometimes speculators have a bad reputation. But if you're willing to work, think ahead and get ahead of the market in any kind of market anyway, any endeavor, this isn't a free ride. This isn't a get-rich-quick scheme. This takes effort and there's risk involved. Your own capital is at risk in this sort of thing. And you bet, you pit yourself and your mind and your effort against everybody else out there. And you're right. You deserve to get paid for that. And I think I left it at that with him, but in other discussions, I want to just very directly, like the evil person who's hoarded gasoline and sells it during the war when everybody needs it, or cigarettes during World War II or whatever it was. Like, if you're Jewish and you're trying to get out of Germany in 1939 and some evil speculator has hoarded gasoline, but he has it for sale when you are desperately trying to get out of Germany, you're happy to pay 5 times more than it was before the war because you get out of Germany. That's your ticket to freedom. And the speculator, the evil speculator who bought the gasoline before the war and sat on it all that time, had to pay to store it and so on and bring it to you at this time of your need, I think is actually giving you a service. If your choice is the car doesn't run and you can't walk 300 kilometers to the border, but you're stuck. So the speculator who takes advantage of this desperate person is actually the market of last resort, like literally saving this person's life if we're talking, scary Nazi scenarios. And I realize this is an exaggeration, but that's the logic, right? If you're going to place a bet against everybody else in the marketplace, which by definition, if you're buying low, right? If you're not going with the herd. If everybody else is buying it, it's going to be high. So if you're buying low, by definition, you're going against everybody else. So if you're willing to do that, and somebody urgently needs your product or whatever, your service or whatever it is at some future point, to be able to provide that to them when they urgently need it, that is a valuable service. And I would argue you deserve to be paid a premium price for that. Now, of course, I wouldn't want to be, I have a Darth Vader mask around here somewhere. I wouldn't want to go over to the total dark side and abuse people. But conceptually, I think the profession, the idea of speculation is besmirched. There's nothing wrong with going against the herd, being right, and then profiting from that on a conceptual level. Now, as for definitions, Doug Casey defines a speculator as a person who watches the government. Why? Because the government is guaranteed to do everything wrong or the opposite of the right thing in most cases. So if you watch the government and you bet on the government doing the wrong thing, you'll likely come out ahead. You can see the future by seeing what the governments are doing. This is a very specific and highly technical definition of speculation. Mine is a little bit broader. An investor deploys capital for an expected return, right? Like the simplest model would be you buy a bond and you buy it, for whatever under par, and there's your supposedly risk-free return. If you're buying a shoe factory and you know how many people there are in the country, you know how many times people need to buy shoes, you have a pretty reasonable expectation of return on your investment. That's not speculation. That's investing. Yes, there's risk, but there's a reasonable, rational, calculable basis for ROI, return on investment. A speculator does look forward. Nobody knows the future, but you can project. You can look at trends, sort of like the Casey model. What's the government doing? Well, that's going to have these and these consequences. If so, then gold will go up, or copper will go down, or whatever. Inflation will go up. You can make these projections. And it's not quite the same as buying a bond, obviously. There's a lot more risk in that. But it is not the same as just gambling. It's not just throwing darts at the board and, hey, I got lucky, I won a whole bunch of things. You look at the world, you try to understand what's going on. And not ideally, I think to really do this and diverge from the herd, you have to find something that everybody else hasn't, which comes back to the very first question. You have to have the confidence to be able to say, I'm willing to bet differently from everybody else. And this might sound really frightening or really difficult, but it's really not, for a couple reasons. One is the investment herd often charges in one direction or the other until it's overdone. Markets get overbought and oversold all the time. I really don't believe in the efficient market hypothesis. For things to get overvalued and undervalued is anything but surprising. Happens all the time. And this is a classic Doug Caseyism, by the way. Value and price are not the same thing. Whenever they diverge, whether value gets ahead of price and you can go short, value gets ahead of price, you can go long because the price will catch up with value. Or the other way around, price gets ahead of value, you can go short because the price is likely to come down to the value over time. But you have to be a contrarian. You have to be willing to break with the herd on that. But you can actually see this. When SpaceX IPO'd, and I don't follow these kinds of companies, but this is a money-losing company that got valued at something like 25% of the entire world's GDP for its TAM, right? And you have to ask yourself, well, what is the correct PE ratio, price to earnings ratio, when your earnings are negative? This is a Rick Ruleism. Is negative 5 times earnings a good negative 10 times earnings? Like good PE ratio. So I'm not picking on SpaceX in particular because they do have a moat, right? They have a reusable rocket nobody else has. And I get all that. I'm just saying, if you looked at that objectively when that IPO'd, all the metrics would have told you this is grossly overvalued. And so what happens? After the initial fervor, it drops below the IPO price. I didn't make that bet. I didn't make any money on this. I'm not trying to pat myself, on the back. I'm just using that as an example. A contrarian can look at that, see what the herd is doing, and say, this makes no sense. Now, markets can be irrational longer than you can remain solvent. Being right doesn't necessarily mean you'll be right in a certain time frame, which makes options very dangerous. But if you can place the kind of bet where you can just buy it and wait to be right, you can often do much better than the herd by being a contrarian. So I've gotten a bit long-winded here. My definition of speculation, like if investment is deploying capital in expect of a given return, speculation is deployment of capital with a future probability of a return that justifies the risk. I don't want to put a number on it or anything like that, but you are taking greater risk because of that future component of what hasn't happened yet. And that's what makes it speculation.
All right, Lobo, let me
Okay,
summarize.
so you're looking.
No, go ahead.
No, I just want to say it sounds like speculator is someone that's in a certain arena looking and getting ready for maybe like a paradigm shift or perspective shift or a new realization and positioning themselves before that happens or before the crowd has realized it's about to happen.
Yeah, that can certainly be the case. Or sometimes just, even if there's no huge big market change, like AI is going to change everything, whatever, but just A couple of years ago, in 2018, late 2017, early 2018, the price of uranium bottomed around $18 a pound. That was less than the cost of mining the stuff anywhere in the world. Maybe one mine in Kazakhstan could have done that, but basically you couldn't mine the stuff for that price. And even if you hated nuclear power or whatever, there's still, the US has 400 reactors. There's reactors all around the world. You still needed this uranium. So this is a Rick Ruleism. At that point in time where the price of the commodity in the market, price, not the value, right? The price is less than the cost of production. Either the price had to go up or the lights would go out in large swaths of the world, right? 20% of the United States' power is generated by nuclear power, and it's 80% in France. So either the price had to go up or they would stop coming into the marketplace and the lights would actually go out. So that one, you didn't need any kind of paradigm shift or anything like that. You just needed to have the courage to say, look, this is oversold. This situation cannot last. Either the aliens come down and give us free energy or something, right? Or, uranium goes up. Well, okay. Another Chernobyl event could have derailed that thesis. There's always the possibility of being wrong. But that to me is a no-brainer kind of thesis. In the 90s, there was a time where copper was trading in the markets for less than the cost of production. Like without copper wires, copper radiators, copper, all kinds of things. Today, copper has become a data center thing. But long before that, we called it Dr. Copper because it's such an essential industrial metal. And there's just no way that was going to stay below the cost of production. And yet, the market persisted in pricing well below value. So if there's a key takeaway here, it's that the speculator has to be a contrarian, has to have the courage, and doing the work to understand a market gives you that courage. And this is very different from just being a gambler who just says, oh, I'm going to take a chance, or everybody else is buying this, or, Dave Portnoy, stocks go up, just buy stocks, right? This is a very different thing. There's a thesis, you understand it, and you're willing to pit yourself against everybody else in the marketplace, or the herd at least. And that's the essence of speculation in my view.
Well, you answered the question that I was going to ask, and that's how speculators create value in the marketplace. And what I took away is, and I hadn't thought about this, like it was a genuine question because I could have not given a good answer on that before, but basically becoming the seller when everybody else is buying. Because at the time of everybody's buying, there's nobody selling. That's why prices explode, right? Stuff's always priced on the margin. So what little volume there is for sale pushes the price up. And so with your example with like somebody trying to flee a war zone and you have gasoline for sale, like, yes, that is a tremendous value. And basically the commodity, the gas, gets priced on the value of somebody getting out of Dodge, right? So that's why the gasoline had the same cost of production or whatever, but it's worth that much more to that person at that time, hence they pay for it. And that, of course, creates value. That makes a ton of sense. So thank you for that, for working that out.
Let me add just one quick thing. In a way, what you're talking about is providing liquidity. Right? You're taking that time preference, and because you have capital, you can collapse the time preference and provide liquidity. In this case, liquid energy, but in other cases, different kinds of liquidity. And in our markets now, if there were no speculators, I don't think there would be any mineral exploration at all because it's totally uncertain. Even the biggest and the best mining companies in the world frequently fail at exploration targets. They drill it, oops, no gold, no copper, whatever. It is by its nature a speculative. Actually, even Graham and Dodd, somewhere here in securities analysis, said that the whole mining business was not amenable to proper securities analysis because the underlying commodities, everything was so speculative that it just didn't work. And by the way, Graham himself, the master of investing of the 20th century, Warren Buffett's teacher, Ben Graham said that speculators are, you never trust a speculator. It doesn't work. They're all get rich quick schemes. And I think he never met someone like Rick or Doug who actually had a method and who could consistently produce results. So I don't blame him. I still love him. But I think in his experience, a speculator was a charlatan, was somebody who's like, trust me, give me your money and I'll make all this money. I've got a system, right? We're going to beat the roulette wheel. I'm going off the side of the side point here. But I do think that speculators, people say, well, you never build the mine. You just speculate on the stocks. What good are you? Well, if I bid up the stock when nobody else is and the share price goes up, well, now that company can raise money at a higher level with less dilution to go drill more holes and make the discovery. Or if I participate in a private placement, I give my money directly to the company for them to go and drill something or build something or whatever. So yes, the speculator, if only by providing liquidity, is an important part of the market, but he can or she can directly participate as well.
The dynamics sound pretty similar to like a private equity venture capital sort of investment or speculation, right? So why, when somebody says I'm a VC, I run a VC fund, nobody gives them dirty looks, right? But
Yeah,
they're kind of doing.
Yeah, that's exactly right. In our space, if you're gonna fund an explorer, we call it a private placement, right? They exist in other places, but private placements are very common in the mineral exploration business, because most of these companies have no revenue. They have to go to the market, issue new shares, often with a juicy warrant as an incentive, to raise money to keep the drills turning. How is that evil? How is that more evil than a VC, giving angel funding to somebody who wants to build the next Uber something or other? I think it's very similar. Not to overquote our friend Rick Rule, but he often jokes that, everybody's suddenly discovered private credit. He's been in private credit his whole career. That's what he does as a loan shark.
Right. And so how did you get up to the level where you're at? Because you started, you mentioned this moment where Doug came to you and said, hey, give me some tips for the US market, right? But then when did you take the leap of going in with your own money? And then in that, do you remember among the first times you were right when everybody else thought you were wrong?
Separate questions. So I guess the key one, the broader one, is that yes, you can do this at home. When I started with KC Research, I had no money. I didn't have 2 quarters I could clink together in my pocket, pretty much. When I went independent, I did have savings, and I put all of it into starting my new business. So in the first year, I was negative cash flow, like massively. The second year, I made that back. But if you look at my public track record, which has my closed positions, you can see a return of investment of about $500,000. And that's just the net cash, like the actual cash made. And so it's not a huge fortune, but that's $500,000 from somebody who started with nothing, right? Who saved, who took my salary, and as Doug Casey likes to say, produce more than you consume and invest the difference. Fundamental Caseyism. Produced more than I consumed. I invested and saved the distance. You can see what I invested, when, where, what fees I paid. All of that's in the public track record. And you can see where that money came from. So I can look you in the eye and say, yes, anybody could do this. Hopefully I had some expertise to bring to bear. I did a good job picking my stocks. But it's not like somebody handed me millions of dollars and then I went and made more money on those millions of dollars. I built that portfolio. I think my first investment was maybe $3,000 because that's all I had at the time, maybe 2.5 to put into a stock. So I think anybody could, stop going out on weekends for a while and save up that kind of money. I know a kid in college. He was a college kid in Belarus. He was staying at one of these government youth hostels at the Belarus State Economic University in Minsk. And he went to a talk that I gave. Remember that Eastern European thing? He went to a talk that I gave, and he was really excited about the idea of becoming an investor. So he went home, and with his, maybe not pizza money, but, pilmenis or something, he went online and he taught himself options trading, and he got himself a trading account, like a day trading account through Moscow, had access to the NYSE. And he figured out his own version of the stochastics, RSI and all those things you see on those charts. He figured out his own stochastic equation, and he started making money, he told me, on 60% of his trades. And that, people, I say 60%, that's not a lot. Well, but if it's consistent, if you're always making 60%, that's the holy grail. That's repeatability, right? So suddenly, sorry, I love this story, but this kid, this is literally a college kid with no money, no silver spoon, no family, anything, not even a couple $1,000, like tens of dollars, hundreds of dollars, saving up money and putting it into the market. And there was a point where, I kid you not, he was making more money on a monthly basis than I was. At that time, I was on a fixed salary, but not invested. This was quite a while ago, maybe 20 years ago. But he's making like 12, 15 grand a month from his dorm room. I was like, wow. And then, but two things from this. One is, so here's a college kid. Absolutely. Like if a college kid in Minsk can do this, anybody can do this if they're smart and they're willing to work hard, figure things out, and have that courage we've been talking about to do this. Like, how many people might have had the idea, but then, I couldn't do that. I'm just a college kid in Belarus. Like, what can I do, right? I love this story. But my favorite part is he reinvests 40% of his gains. He saves 50%, like half of all his gains every time he pulled off a trade, he put in the bank. Just put in the bank, half, he put in the bank. Reinvests with 40%, and he spent 10%. He's still the richest kid on the block with that 10%. But that's all he spent, just the 10%. And so, I love the way he built himself a successful little empire. And of course, at some point, whatever it was that was working for him in the markets stopped working, and he had to change, like his, whatever was feeding that equation of his. It lasted, I think, for a couple of years, and then he had to go back and he started doing Forex trading. And I've lost track of what he's doing now. But this is a true story. This really happened. You really can start from scratch. If you've got the intellectual capital, the financial capital is the easiest thing to come by. If you don't have the intellectual capital, sorry, I'm not sure what to tell you, but the financial capital may not stick with you long. I don't know if I answered the question. I got excited about my story here.
Yeah.
But I think we were asking about, how can anybody do this? And I think my answer is emphatically yes.
Well, and do you remember a time when you made a bet where everybody said, no, you're going to fail?
Not exactly. I do remember putting out a shopping list of 10 or a dozen stocks that I thought were absolute screaming best buys, like December 1st of 2008, when everything was falling off a cliff and people were screaming bloody murder. And if memory serves, I don't hold my feet to the fire on this, but if memory serves, all of those stocks had doubled sometime in 2009, and they were gold stocks mostly. And by the time of the top in 2011, for that interim peak, I think the average gain on those stocks was something like 400%. And at the time, many of the people who got it, they were already all in. They had been buying on the way down, so they weren't able to participate. And other people were like, you bastard, gold's down, it's never going up again, it's done, it's a pet rock, it's going back to $200 an ounce or whatever. So there was definitely a lot of people who were very unhappy, but that worked out really well. Maybe my most famous contrarian calls have rather than been going long, but the other direction. People hate it when the party's going. The last thing anybody wants is the voice of reason to show up and say, hey, maybe we should take some profits here. But when you see stocks or any market going like this, going vertical, that cannot last forever. And, famously in January of 2004, I was on a uranium panel at the Vancouver Resource Investment Show, and uranium was in triple digits. Everybody was so excited. And I reminded people about the hockey stick. And they all moved away from me on the Group U bench there. But then, history happened. And this January, I said something very similar about gold and silver. And boy, did people get mad at me. But now at Rick Rule's conference just a week or two ago, the people who listened to me and who took profits, they are so grateful. They're so happy. People are giving me gifts. It's a little embarrassing how grateful people can be. But when the party is just raging and everybody is convinced, that might be the easier call. Like timing the market bottom, that's really tough and things can get worse. But when everybody is convinced that it's going to the moon, even if it keeps going up after that, taking profits, you still got the profit. If you've booked a win, a win is a win. So for what it's worth, those might be some of my more famous contrarian calls recently, or roundly hated calls.
What's there to be said about patience in this game? So are you a naturally patient person, or did the market beat that into you? Or
that is one that I would say I learned. I know that as a child, I was regarded as very flighty and impatient. And I can remember being impatient in many ways. I think School of Hard Knocks, life tumbles you along and wears off some of the rough edges. I think the market did teach this, but also I think if you're just paying attention, you you understand that, good things come to wait, discipline plays. That's not too hard to understand. I think what makes it difficult is when the price seems to be telling you you're wrong. It's like just waiting time. If it just takes time to be right, that's okay. But when the market's going against you, you buy something and it just keeps going down. And you look at it and you're like, no, it shouldn't be going down. Everything's fine. And it keeps going down. Or, you look at it again, they found more gold, or they drilled more oil wells and they're producing. Like, this shouldn't be going down. And it keeps going down. It makes you wonder, have I missed something? Like, there's thousands or millions of people out in the market and you're pitting yourself against them. What are the odds that you understand everything better than all those other people? It can be really difficult when the price is telling you you're wrong. That makes it harder to be patient than just the fact that time is passing. And for me, what has worked is, you go back, you question your premises. If you just like, no, I'm not listening, I can't be wrong, that's asking for disaster, because sometimes you are wrong. And you go back and you look at it and you're like, holy cow, I didn't realize they had all this debt, or there's all this problem or something, and then you take your lumps and move on. But if you go back and you look at it and you're like, no, there's nothing wrong here. Well, then you average down, right? And there are big wins in my portfolio that are easily 2x or 3x what they wouldn't have been if I hadn't not just had the patience to wait for payday, but had the courage to say, no, the market's wrong, I'm right, or I think I'm right, so I'm going to double down here.
Is there ever a risk to, want to be a hero? Does your ego ever interfere? And it's like, no, but I want to be right, so I'm going to stick with it.
No and yes. I don't think, I came to this business, I was already in my 40s or late 30s. So I'm not fresh out of school. I already had a few bumps knocked off the edges here, rolling around in life. So yeah, but what does affect me is if a trade goes against me, and I understand I am a public figure. I only invest my own money, but people follow my trades. And so if a trade's going against me, I know it's going to hurt other people too. And if I'm wrong, we bet on this discovery and it didn't happen. It looked really good. The drill results were encouraging. It's just not there. Mother Nature was especially bitchy that day to the geologist. It happens all the time. Mother Nature loves to torture geologists. Some high grade sample at surface, you drill underneath, there's nothing there. That happens. You got to take your lumps and move on. But if it's, again, the question of patience or something, I tend to err on the side of being patient, because if I say, oh, well, I'm nervous about this, it's not going my way, and I get out, and then the next week they put out the drill results and they make the discovery, and all those people who followed me realized an unnecessary loss, that would kill me. Like, if it was just me and I lost money, okay, I'm a big boy, I can take it. But if everybody who followed my example lost money unnecessarily, I would feel that would be devastating. And I have made some mistakes. There have been some times where I have issued guidance that not just didn't work out, but it was just wrong. I misunderstood something about a story and it was wrong. And I take that really personally. Like that really upsets me. So no, I'm not prone to wanting to be a hero, but maybe I'm prone to being a little slow on the trigger sometimes, because I realize the momentum of all the people following me. And that's something that I have to struggle with. And maybe here this is genetic or something. I got to tell you, I don't think I've ever felt FOMO. I just don't feel it. When I see some price going crazy, instead of saying, oh, I got to get me some of that, I look at that, then my immediate response in my mind and in my heart is, well, that one got away from me. Like there's no interest that, that's it's gone. Wow, look at that rocket. Look at NVIDIA. I have never wished that, I'm going to pile into NVIDIA. I've never even thought of it. Okay, maybe if I had piled into it after the first year when it went vertical, maybe I'd make more money. I don't claim to get everything right. I don't claim to know everything or whatever's going to happen. But I am convinced that if I chased everything that excited me at some point, I'd probably be flat broke now. Like if I had given into FOMO and NVIDIA, sure, I would have made a lot of money. But if that taught me that FOMO is okay and I gave in to FOMO and everything else that looked exciting, I think I would have lost everything that I made on NVIDIA, because the times where FOMO betrays you far, far, far outweigh the number of times where FOMO might randomly pay off for a gambler.
So you mentioned you had made some mistakes. Is there an example that you can share where that you still think about it, it still bothers you?
Yeah, early on, I think I was, when you're smart, and I'm sorry, but you're smart, you do good work and things, people say, oh, well, he's doing great, just let him rip. But you're still young and inexperienced. So intelligence can only make up for experience to a certain level. And at some point, you just don't know things you didn't know. So an example of this would be, back in the day, there was a company called Virginia Gold that had a really exciting, high-grade, consistent discovery in Quebec. It's just like every batch of drill results, boom, 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 like clockwork, 2 or 3, 4, 5 meters of high-grade gold, just every time. And the stock goes way nuts. It was a 10-bagger for us in my KC research days. I didn't pick it. It was already in the portfolio. But then they got a takeover offer from Goldcorp, I think, at the time. And I was like, well, that's it. That's, the big premium. Congratulations, everybody. Take the money and buy a Lambo if you want, or whatever. But keep most of it to reinvest in the next speculation. And what I didn't realize, because again, I just didn't have the experience, is the offer, it wasn't for cash. It was, I think it was a combination of cash and shares, but there were shares in a new spin out company that would get all the non-core assets. Like there was this one project that had this terrific discovery. And then there were all these other projects in the portfolio. None of them had anything as advanced, but they were there. They had potential. There was potentially some value there. And there was the management team and there was the money that got spun out into this new company. And I didn't realize that. So we sold and we made money. Like anybody who got in when we got in and sold when I said to sell, and this was my call. It wasn't Doug's. It was me. I made this call. You made money. But by taking the cash, by selling in the market, you missed out on the free shares. Free is a great entry price. Like even if that spin out company did squat and went nowhere, how does that hurt you? You got it for free, right? And if it did anything, then getting in for free, like what's your multiple? Zero. It's almost literally infinite, right? It's asymptotic over any gain over zero is indefined. And that company, the exploration, I don't think ever really delivered that much, but it became a royalty play. And eventually through a series of mergers and acquisitions, it became part of what is Osisko Royalties today, which is a very, successful, valuable company in the space. People could have got a hand in that for free, if not for my mistake based on my ignorance of not fully understanding that deal. And boy, did I learn from that. And I look over these deals, much more carefully now to look for, hidden pitfalls, holes underneath the waterline, right, and benefits. So that would be one example. And by the way, I take that very personally. That was at the beginning of my career, so that's 20 years ago plus or something, and I'm still bitter about that. I don't lose sleep over it, but man, it just sticks in my craw. It's such a rookie mistake that I made.
Lobo, I wanted to ask, you mentioned the Doug Casey, right? Saying speculating is basically looking at what the government's doing and then taking the other side. We invest a lot in extractive industries as well, but something always keeps me up at night where I know these minerals are lying in the ground, and that ground is the jurisdiction of some government somewhere. And when things get tough for that government, I always feel like it's like you owning real estate in a country that's, I don't know, going bankrupt, right? You're almost like a sitting duck. You can't really take your investment and leave. So how can we balance that out as we see, geopolitics getting more crazy, governments getting more indebted? The minerals and the commodities in the ground they just look more and more juicy. And the governments are at the same time getting more and more desperate, right? So how do we invest in these minerals and commodities with that in mind?
There's two schools of thought on this, and both Doug and Rick, two of my main mentors, are pretty comfortable with what we call political risk. Doug likes to joke that you can run, but you can't hide. And Rick likes to say that it doesn't matter the color of the skin of the person who steals your money. It's just as stolen. And he says that he's suffered greater theft from politicians in California and even in I don't remember which province of Canada he cited, but even in Canada than in the Democratic Republic of the Congo. So I think that's true as far as that goes. I can't disagree with the logic. If your money is stolen, nationalization is just so easy and big to see. But a tax shift that renders a project uneconomic has the exact same effect, even if they didn't outright steal the mine. So I get that, right? You can run, but you can't hide. So all you can do is mitigate the risk by not putting your eggs in one basket, by taking profits. This is the classic Doug Casey formula, because all speculation has risk, because no matter how great something looks like it's doing, as soon as you double your money, you sell half. If you sell half on the first double, then whatever happens after that, you can't lose, right? And if it continues to being a success, great, you still make more money. But if it gets nationalized or political risk rears its head in some other way, you can't lose. You've gotten your initial investment off the table. I've tweaked this a little bit because it limits the upside. I have my own system. I call it the Upside Maximizer. It's a free download on my website. But I use something like a trailing stop to let this run. But the answer to the question is that political risk is always possible in any country, and even the most pro-mining jurisdiction. Even in Nevada or Ontario, they could discover the legendary endangered mosquito on your property, and suddenly, you've got nothing. So taking profits as you go, it's not because you lack confidence or you're a traitor to gold or whatever, it's just prudent. It's essential speculator's discipline to, at the very least, recover your initial investment when you can in a reasonable way, because you never know what's going to happen. All of that having been said, personally, you can usually see when the natives are getting restless and a tax increase is on the way in a Western country. It doesn't happen by fiat usually. There's a certain country south of Canada, north of Mexico, where there's a lot been happening by fiat recently, but that's not the normal case of a course of events in Western so-called democracies. So whereas, a sudden nationalization in Latin America or in West Africa is pretty common. And when that happens, you can't get out fast enough. A day late is just way too late. Stairs up, elevator down kind of situation. So personally, I am more risk averse than my mentors. I'm not saying I'll never go and invest in Ebola Central or whatever, but it takes a big discount to get me to go there. If I had, no two projects are created exactly equal, but if you had, let's say, 5 million ounces in Ontario and 5 million ounces in Mali, roughly the same grade, same chemistry, same margins, I might be willing to invest in the project in Ontario if it's selling for, let's say, half of NPV, net present value. Something like that. I still want a discount. I'm never paying full price for anything. The whole idea is buy low, sell high. You cannot buy low if you're paying, fair market value for something. There has to be a discount and a good reason for it. But if it was in Mali, maybe 10 cents on the dollar. Well, Mali's had a few coups too many for my taste right now. So it might take pennies on the dollar for me to invest in or speculate on that same deposit in Mali. But let's say Ghana, which has been a little bit scary lately, but it's been one of the more reasonable places in Africa for decades, actually. I've seen mines built there. I've seen the Western owners not get expropriated and be able to profit from their mines. So in Ghana, maybe I'd want 25 cents on the dollar. I'm not giving these numbers as a formula. Please don't take these numbers and apply them, like a cookie cutter to any investment. But I'm trying to give you the idea, which is actually a Doug Casey idea, is there is a point at which price mitigates risk, even political risk. And if you can buy something for truly pennies on the dollar, even in a high risk environment, and you've got the patience and discipline for wait for it to come out, you could do spectacularly well. I was just talking to Rick Rule about this, and he bought into the Tenke Fungurume copper deposits or district really in the Democratic Republic of the Congo. And not recently, he bought in the 90s, like before the machetes came out and millions of people got hacked to pieces. And he held on to his stake through thick and thin. And eventually he made a bunch of money. You talk about contrarian courage and patience, that took a lot, but it's a world-class asset, difficult place, but a world-class asset that he got in cheap enough that despite time and dilution, he was able to come out ahead on that. So you can run, but you can't hide. At some point, price trumps risk. But yes, of course, I pay attention to this. And I'm willing to pay significantly more for the kind of place where you don't have to worry about your geologist catching Ebola.
It sounds funny when you say it like that, but it's of course not funny for the geologists, right? So, Lobo, coming towards the closing section of this conversation, if you had to do it all over again, what would you tell 25-year-old Lobo to get to where you are today? Or maybe beyond, right?
25-year-old Lobo, let's see. So that goes beyond specific investing and financial advice. Let me pull back a bit. One of the most common answers you get if you ask people a little bit older than me, retirees, many of them will tell you that they wish they had more fun along the way. Like, yes, it's important to get ahead and, you've got the family you want to provide and all these things. Or you have these goals. And if you had no goals and you didn't strive, you wouldn't achieve great things. That's all good. But you know what? If I had stopped and smelled the roses a little bit more, right? Or if I had just taken the time to play with my wife a little bit more, right? I might, things might have gone different and I still would have achieved. Like, I'm not saying give up on your work ethic, but I was pretty, work ethic up the wazoo, like all work and no fun. And there's an old saying, like, if you don't stop to sharpen the saw every once in a while, it stops cutting so well. Like, you have to stop sometimes, take a break and do all that. I can say it's a true story. My partner in the business is my ex-wife. She was my wife when we started. And I remember she came into this very office when first day we made $1 million. She said, "We made $1 million, just crossed the line." And I thought, yeah, but it cost me you. And, maybe it didn't have to go that way. I'll tell you one more thing, though, going all the way back to the beginning of our conversation, a little bit more upbeat on the do what you love and the money will follow kind of thing. I remember it was early this year that I crossed the Kiyosaki threshold. If you ever read Rich Dad, Poor Dad, the idea to get out of the rat race, right? Where you stop working for money and your money works for you. I officially got out of the rat race earlier this year when I took profits, paid off my mortgage. My living expenses are de minimis now. And my investment income could cover my expenses, So here I am, I'm sitting at this very desk and I'm like, wow, I've made that Kiyosaki threshold. I'm out of the rat race. I don't have to work another day in my life. So what did I do? Said, well, I got work to do, right? I love what I do. The geology fascinates me. And I love the fact that I've been able to help a lot of people too. I've made money for myself and I've made money for a lot of other people. And that is literally what happened. The moment I realized that I'd crossed the Kiyosaki threshold, my immediate thought was, okay, well, I've got a report to edit, right? I've got work to do. I haven't changed anything yet because I love what I do. And to me, all of this fits seamlessly together. It's absolutely no coincidence at all.
So, Lobo, I love those two anecdotes. But just in case some people listening in haven't heard of Rich Dad, Poor Dad, or haven't read Kiyosaki, is the Kiyosaki threshold when your investment or passive income, where you're not selling your time,
Yes.
makes you enough money for your cost of living? Is that the threshold?
Sure, something like that. Or, we used to say, if you read Victorian romances and things or watch period movies, you'll hear of a person of independent means. It means they don't need to work. They don't have a job. A gentleman didn't get his hands dirty. It was because he didn't have to, right? And back in those days, it's because you had basically slave labor. I'm not trying to defend the feudal system or anything here or Victorian privilege, but conceptually, when your properties and your investments generate enough to cover your lifestyle at whatever level. I think not just your cost of living. That's you don't want to just subsist, right? You want to live, right? So that would be that. I could give you one more quick story. Kiyosaki has this book, Rich Dad, Poor Dad. Highly recommend it. He also came out with a board game to try to teach this
I
idea to
played it.
children.
Cash flow, is it?
And I played this game only one time. This board game was so effective. I played it with my children one time. And one of my kids, all my kids are smart, of course, but one of my kids is just really good at board games, has just an excellent memory, remembers where everything is. And he excels at board games. And early in the game, just maybe influenced by Monopoly, where you want to have boardwalk and you want to have all these, the best properties. So like he buys this big house in the game. And a big house comes with a big mortgage. And that big mortgage, like he did everything else right. He played excellently in this game. But that mortgage ate his lunch every turn. And, his little impulsive sister whooped him in the game. He came in dead last in the game. And I kid you not, for like weeks after we played this game, you could hear him walking around grumbling, frecka, mortgage, rah, rah, mortgage, rah, rah, rah. What a great lesson. And all of my kids got it. They didn't need to experience what my poor son Orion did with his mortgage to get the point. So yeah, being able to leave the rat race is a good thing. Oh, by the way, I said nothing changed, but of course something's changed. Knowing that I work because I want to, like I love what I do. So, but knowing that it's not like I have to, or there's I'm not gonna lose my house or anything like that. It is an enormously rewarding thing. And for anybody who hasn't crossed this threshold yet, it is absolutely a worthy goal to strive for. And we talked about freedom earlier. This freedom, the freedom from needing to work, as opposed to just wanting to do something you consider worthwhile. It's hard to put into words just what a wonderful feeling that is. That freedom is enormous.
So, Lobo, how do you see this? So this is something Jason and I talk about a lot, right? So Jason and I both have pretty young kids still. And it's something that drives both of us is to create something we can leave behind for them, right? Or pass over to them. And for me personally, ideally before I die, right? So I'm not trying to build like a massive inheritance. I'm trying to, for example, build a business that hopefully my kids can work, of course, if they want, right? But that ideally they would want to then take over and work in, for example. And so that also this wealth transfers with it and the lifestyle and the whatever. How do you think about all that?
Similarly, though, I'm at the point where my youngest is 26. None of my 5 children have expressed any interest whatsoever in following in the old wolf's footsteps, the family business. The door's been open. I've told them all, no preference. Like if you want to be an intern here, you'll get the same deal as anybody else. But if you want to, I'm happy to take you on. None of them have raised their paw to follow the old wolf. It's okay. But I have that thought. Like my partner, my then wife at the time, she had this idea that we wanted to build something like Dior. This is her world. My metaphor would have been Ferrari. Like everybody knows what Ferrari or Dior stands for. You don't need to convince people that a Dior accessory or whatever has value if you're right, or you don't need to convince somebody that a Ferrari is a great car. It's there. It's multi-generational, right? Enzo's gone. But, right, you have to work yourself up to get the Ferrari you want. Nowadays, you have to buy a Luce if you want a better car. But you understand what I'm saying? So the idea from the get-go was to build something like that. And I think we have. I was telling you how grateful people were at the Rural Symposium. And this may sound like self-promotion, but it is the answer to your question. I had a reception for my readers. There were about 50, 55 people there. And they all give me money, right? They pay me for my services. And they're thanking me. Like they're paying me and thanking me for the opportunity to give me this money. Like that's how valuable they see my services. That's an amazing feeling. You talk about amazing feelings and positive feelings. I don't feel like I'm tricking anybody into subscribing. I don't give away, I don't do discounts. There's no promotions. There's no free Cupid doll or something if you subscribe now, none of that garbage. It's the same price for everybody. Here's our terms, take it or leave it. And people are grateful to give me their money in exchange for my expertise. That trust, that couldn't happen without trust. That brand that we have built, that's our version of Dior or Ferrari, is that people actually trust me and they're happy to give us money in exchange for that valuable product that we give. I think that's the kind of thing that can, like Ferrari or Dior, survive over generations. If one of my kids wanted to step into the role, they'd have to fight their way up the corporate ladder, which is super flat. Everybody reports to me. I have no middle management whatsoever. But there's a shot there. But I've also told them, look, it's not that I don't love you or whatever, but I don't want to disperse the asset. I'm not going to divide my net worth amongst all 5 of you because you're all genetically related to me. I would like to see the company continue. If, my goal, this is actually a Doug Casey thing too, the most worthy heir should be the one who inherits. So if there's somebody on my team who thinks the most like me and I feel confident will maintain the trust, that precious trust that we've built over the years with our client base, can maintain, that it's Ferrari and not suddenly start putting out Yugos or something under the Ferrari brand. You know what I mean? I would want that person to become CEO if I got run over by a bus, whoever it is, right? The most qualified and the person who I trust the most to do the right thing by our clients. And I think that could last for generations. And if anything, in this world with artificial intelligence creating, really credible deepfake videos, to have somebody that you can trust, like I don't even need to always be right in my market calls or even my company analysis. Mistakes can happen. We cover 1,000 companies right now. I can't get everything right, but people know I work for them and they trust me. And as long as that trust is never betrayed, I think this could be a multi-generational business. It could expand beyond metals and mining to other areas in the future. Because in this world that we're heading into, to find counterparties that you can trust, I think that is hugely precious and rare, all the more so going forward. Sorry, I got a bit on a rant here, but I like this question and I think it's really important. And I hope that I can, I'm not that old yet. I hope I'm here for a long time, but I do hope that this thing that we've built will survive me. I think there's value to be delivered in the future if it does.
Yeah, 100%. Thank you for that view. So I've heard a lot of times people in the baby boomer generation, to keep it very general, say, oh, I don't really care. I want to be the one spending the money. So I'm going to sell the business now for top dollar and just have a good life until the end. And my kids, they can figure out their own thing. And that's I find it very hard. Because I'm like, to me, money, so I really like the story from the guy from Belarus, right? He had a very small percentage he would spend. It's not realistic for my current situation to spend that little of my income, 10% or whatever. But I definitely think that like every dollar has a job and you want to stack more of them than you spend. And ideally, I'm not saving for then to blow them all before I kick the bucket, but rather, maybe spend some of them, but leave plenty for my whoever comes after me, right? But yeah.
Let me throw a couple quick thoughts in. We've been going for a while, but a couple quick thoughts. Yeah. One is, even if you're in your 80s or 90s, I think it is a mistake to spend down all your wealth, because there are treatments coming out of the labs now. And I don't just mean research, but like coming out of the labs to commercial deployment. I think in 10 years, cancer is going to be like the common cold. Maybe I'm wrong. Maybe I'm over hopeful, but maybe you live 15 years. It takes a little longer. If you spend all your money and you find yourself not just alive, but in a healthier body 10 or 15 years from now, and you're broke, you're going to regret that. I think it's a huge mistake to spend your money. Like you 90-year-olds out there, think about this. Imagine if when you're 100, you're healthier than you are now, more vital, more energetic, more healthier. You're going to want to have means. You're going to want to be a person of independent means. So just put that thought out there. The other thing is, love him or hate him, Elon Musk. If he had petitioned NASA diligently year after year to bring back go for the idea of reusable rockets, we'd still be waiting for that to happen. He just had the money, so he just did it. He didn't wait for permission. He didn't wait for the bureaucracy to decide. He didn't wait for the committee to approve and put stamps and all this stuff. He just took his money and he just freaking did it. So we talked about money as power. You know, the more concentrated money you have, the more ambitious projects you can achieve. And what a great thing is, like, agree or disagree or whatever, you know, if Elon actually succeeds in single-handedly pushing our species to multiplanetary status, it will be because he had concentrated wealth enough to do it. And so maybe you don't have those dreams. Maybe you're not the person who's going to, you know, do something on an Elon Musk scale. But if you have a fortune and there's somebody amongst the people that you know and trust and care for who does have big dreams, who might be able to use that fortune to do something, you know, glorious for the world. How much better than that is it to just, you know, spend it all on Dom Perignon or whatever? Sorry, my quick 2 cents there.
No, awesome. Yeah, thank you so much. Yeah, I think we'll close it on that, Lobo, because you nailed it. Tell our listeners where they can find your stuff. How do you get in touch with you?
Okay, for the 3 people who don't stop listening when you say that, that was a very simple proposition here. I have a free weekly macro letter. Free is a good price. You may or may not agree with everything I say. Probably will disagree with many things I say, but it's free. And the one promise I can make is we won't spam you. I hate that. You won't get a flood of daily advertisements. You get 1 email notification per week. And then if you find value in my work that way, you can explore for further involvement.
Awesome.
Okay.
And people just Google your name and you pop up, right?
Everywhere. The URL is independentspeculator.com.
There you go.
One word. One word.
Yeah, one word, independentspeculator.com.
Excellent. All right, we'll make sure to put that in the show notes as well. All right, well, enjoy the rest of your early evening in Puerto Rico. And thank you so much for joining us.
Yeah, thank you, gentlemen. Very interesting conversation. You did not disappoint. Great questions. Some of them I had to pause and think, but that's better than a glib answer that doesn't mean anything. Thank you.
Thank you, Lobo. Thank you so much.
And that wraps up our main conversation. But we're not done yet. We're going into overtime, where Jason and I unpack some insights, reflect on what just happened, and connect a few dots. And go.
All right, guys. I know it's late in Leipzig. So
Late in Leipzig.
Keep it snappy. Yeah, I had the privilege previously to meet Lobo. Adrian Day introduced us. I completely forgot to mention that previously. Should have probably taken everybody on that journey. Had a quite interesting dinner conversation there. But this, I think, was your first encounter with him. What do you think? Like, what was your initial impressions?
It's weird. It's weird because so many people we talk to, it seems like we've all started from very different backgrounds, with different personalities, with different interests, right? But when you talk about topics like freedom, investing, speculating, it's pretty cool to see how, when you distill down to it, we almost like are cut from the same cloth. The cloth might be different colors, right? Or feels different, but somehow it seems like there's this tapestry between us, even though we come from different places. And with Lobo, it was once again, right? Like, you could hear how his philosophy, runs parallel to so many of our other guests, and also to your own and mine. And we're not carbon copies of each other, but just so many parallels. And that was one of the things that, came to be. And also with the questions, you could tell he was answering them with very well thought out positions. So it also shows you that, to me, he's been thinking about these topics for a long time, chewing on it, distilling it a long time. So yeah, that was my first impression. And I really enjoyed the whole conversation.
Yeah, I really like talking to people that think for a living, if that makes sense. Because, and that he's a writer. Like I said, people that write a lot, I always think they have such a structured way to give an answer that's actually that's cohesive. You can kind of understand where they're going. They don't. So like he's like, oh, I'm sorry, I'm rambling. It's like, no, but he didn't though. Like, he was telling us more and more anecdotes, but they were all relevant, right? He maybe strayed a little from the original path, but it wasn't like Yeah, that's just like what I read in the news yesterday. You know, it wasn't like completely out of left field. It was all very on point. So I think that's awesome. And I also really like, so learning a lot more about what he actually does. He only invests his own money, but there are people that follow his calls because he publishes them in like a paid newsletter type format. I don't know. So it's amazing to me how many people in a way do this, right? Because there's tons of like financial newsletters, but then there are still, it feels like very few that actually stick with it for like 10 plus years, and where it's like not just a thing that occupies them, but they genuinely love it, right? That's like their thing. So I think that's also always really cool to come upon somebody. And then I really like what he said about his like just how he visualizes what freedom means to him. And this is something that I've always said to Gloria as well. I'm like, there's something about having space, like physical space, that for me, like it really is like I feel like more at ease and like more relaxed if I have room, if that makes sense. Now I say this in my podcast booth, which is very small, but the fact that I have enough room to have a podcast booth is pretty good. No, but like, so I remember, you know, just, I don't know, if you like, maybe you're in a cool city like New York City, but you live in like a shoebox because it's so outrageously expensive that you just cannot afford any more than 40 square meters. That would kill me, right? Like it would not be a very good environment for me because I just need the physical space to breathe and to think. So that resonated very strongly with me. And then, of course, like the anti-freedoms, right? Like debt, like government interference. But like he's right. On the other hand, like I mean, I guess maybe he's never lived in Europe. I'm not sure, but I feel like you do encounter communication with agents of the state in Germany very like way too frequently for my taste. They always send you these like brown letters with recycled paper, and I'm like physically allergic to them. But yeah, that's an anti-freedom. And then yeah, having a bunch of debt to the point where it's something you think about because you can't change up things in your life because then you can't meet your obligations. That for sure is also a great illustration of a anti-freedom.
Yeah. Yeah, I like that. I wanted to add something, but I didn't want to interrupt him. But I think for me also, when you're in debt, you keep looking towards how you can get out of debt, right? You save money to put that debt away, to retire that debt, and then you're free. But say you are not in debt and you're trying to do, you know, what you need to do on a day-to-day basis, pay your bills, and then save a little bit. You then get exposed to the volatility of life, right? Like the price of butter's going up, or the price of a car repair now is maybe too much for you to handle, a lot more than you thought it would be. And these things, like right now in Europe, the petrol price is €2.50 because there's a war going on, right? €2.50 a liter. So you can, for the audience, I don't know what that is in dollars per gallon, right? But I don't know, is it like 7 something?
No, it's like $9 to $10, I would say.
Right. So $9 to $10 a gallon, right? And when you don't have enough money, that's actually stressing you because that's actually eating into your ability to carry. Like maybe at the beginning, it's like, oh, maybe this year we can't go on such a nice holiday with the family, and that's pretty disappointing, right? But then what happens when it gets to the point where you go, oh, I can't drive my kids to school, and if I can't drive my kids to school, I can't make it to work on time, right? Or we need to start eating oats for breakfast rather than our favorite scrambled eggs and bacon, right? And once you get into that mode, you start losing the ability to think on that high energy level, right? That you know, just like how Lobo said, and what you were saying about you need that space to perform, to that space to function at a high level. If you're worried about cost of living expenses going up and down, that's also taking away from your peace and your ability to see and to feel and to know, right? So I think money gives you that ability to withstand volatility, and that's what you want, right?
Yeah. Agree.
But yeah,
Yeah, I
well,
mean,
let's put up I've always followed his interviews and his tweets, but I've never thought about subscribing and reading his thoughts, right? And why not? After speaking to him,
like you said, free is a pretty good price.
free is a very, very good price. Yeah.
All right, mate.
Yeah.
Thank you for a thoughtful, awesome conversation.
Hey, I always have so much fun. Like I'm so focused for that hour and a half, and we get the chance to speak to these guys that are leading very authentic and admirable lives, right? So we have such a great privilege. So thank you as well, and hope we do the next one in not so long, because I've missed it. It's so cool to sit here with you and talk to people, pick their brains.
Let's make it so.